We just wrapped up the FOMC meeting and Jerome Powell let the cat out of the bag as to what the Fed is expected to do in March. This is a huge deal if you are tracking the markets and you are interested in what happens to the markets as well as your portfolio. I'm going to be telling you based on history at this juncture, when we have had similar junctures back in 2008, back in 2000, and even more recently than that, back in 2018, 2019, I'm going to tell you historically what the market has done, why the bond market actually matters quite a bit here, and how the bond market is actually going to be telling us about what to expect with regards to the stock market. And I'm also going to be telling you about what I'm going to do with the investments that I did buy in 2022, as well as reload in October 2023 on the dip, what I'm going to be doing with those investments and why. I personally am looking at a potentially huge rotation in my portfolio from those stocks that I bought late last year into something else. So stay tuned until the end of the video if you want to hear how I'm positioning myself here. Let us get right into it. Let us play this video from Jerome Powell and see what he said about the March FOMC meeting specifically.
Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that, but that's to be seen. So I wouldn't call, when you ask me about in the near term, right, I'm hearing that as March. I would say I don't think it's probably not the most likely case or what we would call the base case.
So as you heard there, he said that in March, it is not likely that they actually cut. And you could see here now, looking at the FOMC Fed Watch tool, that for March, now it is a very high likelihood that the Fed actually skips and does not cut. Whereas before the meeting, there was a higher likelihood that the Fed would actually cut, even though if you've been following this channel, you know that I didn't think so. However, for May, we are expecting almost 100% confidence rate that the Fed is actually going to cut. Some traders think that it's going to be 50 basis points. Most are pointing to 25 basis points. I lean more towards in this camp. So what does this mean for the market? Well, let's think about it real quick. Let's think about it logically real quick. If the Fed is saying that we've reached the peak already, right? And we could see clearly that the last rate hike was July 2023. They're not going to hike more than this, right? So they've already telegraphed that they've reached the peak, and they've already told you that it's likely not going to be in March. Do you think that there's any reason, just based off of that, for rates to start going up? What we tend to see is that at least since 2018, the 10-year yield actually leads what the Fed is going to do. So the Fed pays attention to yield. And they see that when the 10-year yield starts dropping, that is when they actually start cutting their rates. Even when you go back to 2007, a very similar situation happened. The Fed actually had their last rate hike in June 06, and it wasn't clear whether the Fed was done. And then when they started telegraphing that they were done raising rates and that they were actually going to cut and the 10-year starts rolling over, the Fed actually cuts as well. And if we go back to 2000, you could see a similar thing happen where the 10-year starts to actually roll and then the Fed institutes its cuts. So in my view, I actually think that the Fed uses the 10-year as a pretty heavy data point here. And the 10-year already started rolling over, in my opinion. I mean, we could get a little bit of a rally here until March, but in my opinion, I don't think there's reason for the 10-year to actually continue trucking higher, which is a good news for those of you that are trying to maybe purchase some property. But that's neither here nor there. Now, what does this mean for the stock market? Does the stock market act the same? No, the stock market can actually continue to run higher even after the 10-year starts to fold, because obviously initially once rates start to drop, that fuels the market in the short term. So you do see the market continue on for a little bit longer. And then when the Fed cuts, it's usually because of something drastic, like a major slowdown in the economy or even a recession. And that's when the market starts to roll over. So the 10-year actually starts dipping before the market and before the Fed funds rate. So if you're going to put it in a hierarchy, just based on history, it goes the 10-year, then the Fed funds rate, then the market. So with that said, I actually think that the market can continue up higher here just for a little bit. I did tell you about the psychological 5,000 level on the S&P 500. I still think we can get there. But we're talking about incremental growth here, right? We already saw that Google reported not negative earnings, but negative outlook. As you see here, they missed guidance, and then AMD missed guidance, and Microsoft always beats, but they actually didn't do too hot price wise after earnings. And we actually played an iron condor on Microsoft earnings because I had the data showing that most of the time Microsoft doesn't beat the expected move. And so we played an iron condor, closed it for an instant 80%, looking to potentially play Apple earnings in the same way. We'll announce it on the Discord when I know. But Microsoft was the only earnings that I was interested in. So Apple, Amazon, and Meta, those are the three remaining of the Mag 7, as well as NVIDIA. But NVIDIA usually has a weird reporting time, which is at the end of February. But if Apple, Amazon, and Meta, if their guidance is decent, I think the market can continue up for a little bit until that May meeting when the Fed actually does cut, because I think they will cut in May. And around that time, the market will roll over. Now, if guidance is terrible for Apple, Amazon, and Meta, three of the biggest companies in the world, then I do think that this can signal the beginning of the downfall for the S&P 500. And remember, this channel is always data dependent. So have we had a time before in history where the market started rolling over before the Fed cut? Yes, in 2000. Now, if you talk to some people that work at big institutions, they will tell you that this to them feels a lot like 2000. I was alive in 2000. There were a lot of BS companies with no earnings that were mooning in 2000. Very different now. Yes, we have the Mag 7 that are actually, their values are inflated depending on how you're assessing those companies. But we don't have hundreds of companies that are absolutely worthless, that haven't proven a lick of anything, that are at insane valuations, right? You hear it all the time. The Mag 7, those are the only stocks that are keeping the market above water. And that's somewhat true. So to me, it's not the same market environment as the year 2000. Not by any means. But anyway, that's neither here nor there. We have had an example where the market started rolling over a few months before the Fed actually cut. So in 2000, the first cut came in January of, wait, let me see. Sorry, hold on. Actually, I have this data here. I love this article. So the first cut came in January 2001. Right. So before that, the market actually started dipping really in August of 2000. So almost 6 months or 5 to 6 months before the first rate cut. So it has happened. But typically it goes 10-year rolls over, then the Fed cuts, then the market rolls over, right? And I'm not saying this is going to happen here. To me, it's very dependent on Apple, Amazon, and Meta earnings. If those three companies report decent guidance, then I think the S&P 500 will continue a little bit longer, has a chance to hit 5,000. But I cannot sit here and tell you, as I said in my last video, I cannot sit here and tell you that my antennas are not really going haywire right now. And it's not because the markets are at all-time highs. I'm not one of these kooks that says what goes up must come down. No, there's plenty of times that the market has hit all-time highs where we haven't had a significant drop. It's not that. It's that the markets are at all-time highs while we are at peak rates. And historically, that has not been a good recipe for the market to continue higher. So we are at peak rates. We know that the rates are going to, based on what Jerome Powell said, it's not going to be in March, but we know that it is likely in May that rates are going to roll over. And that typically has not boded well for the stock market. So again, in summary, and I will give you just an assessment of or a breakdown of what I'm doing investment-wise here in a second. But in summary, if the four remaining if you count NVIDIA, but really three remaining because they report all together, if Apple, Amazon, and Meta do decent guidance-wise, not earnings-wise, but guidance-wise, then I think this market will continue slightly higher until at least May. If they report negative guidance, then I think we are near the end of this here rally. Now, what am I doing investment-wise? As you guys know, I bought stocks in 2022 and I bought stocks in October of 2023. I've made videos about this. They are timestamped. I cannot lie to you. So I bought those, the stocks that I bought last year that are now have rallied heavily. I am going to start offloading those, right? Like I do have a lot of stocks. So there are things that I can sell calls against, especially if my cost basis is so low that I know that I'll never get that cost basis again, right? That's how I make a determination whether I sell my stocks or not. It's if I've had them for such a long time and I don't think that the stock market is ever going to give me those prices, I'll just sell calls against my shares, right? But if they are stocks that I bought recently and they have gained exponentially, I have no problem letting them go. And so there are some stocks that I have bought recently that have run up insanely that I'm going to let go. And what am I going to rotate into? Well, as I said on the live stream, there are only a few things that I'm really interested in here. One of them, I'll give you one of them. The rest of them, I'll put it in the Discord. But one of them is definitely bonds. Now, again, if you're a fan of this channel or if you're in the Discord, you know that in November, I started rotating into bonds. I don't like to get into things late. I like to jump onto things when no one's looking at them. November 8th, I started increasing my exposure to bonds. That is TLT and TMF. So if I expect yields to drop over the long term, I expect these bond ETFs to continue to rally because remember, bond prices and bond yields are inverse. And then with regards to short-term bonds, I want to take advantage of this dislocation here between the 10-year and the 2-year. Normally, what happens, especially into recessions and coming out of recessions, is the 2-year tanks against the 10-year, right? This is when it goes from inverted and then you see this violent rally. So I personally want to catch this and I'm looking to once again enter into ZT futures, which are the 2-year futures, because once again, there is a inverse relationship between bonds and prices. So as the 2-year tanks, because right now the 2-year is still paying more than the 10-year, it's crazy. But as the 2-year tanks, I do expect this to continue rallying. So I'm looking to gain some exposure in that. Anyway, traders, quick little video. That is it for this video. By the way, I started live streaming every single day. Now, a lot of you join for CPI FOMC, but a lot of you don't join for the trading. But if you want me to keep doing it, make sure that you join those live streams. Make sure you join, you hit the thumbs up. Would love to have you. I day trade with you guys almost every single day on YouTube for free. So make sure you join those. Leave it in the comment section below. Let me know what you think of what the Fed said. Let me know what you think is going to happen in the near term. Would love to hear from you. Come and join us. We are closing our Discord to the public. It is going to be wait list only. So if it's open and you want to join, make sure that you join us. Otherwise, you will have to sign up to the wait list, which if it's open, you'll be able to join. If it's not open, you'll see the wait list in the description and then put your name on the wait list for when spots open up. Anyway, traders, that is it for this video. Hope you got something out of it. Hit that thumbs up. Stay safe out there, traders. Peace.